Welcome to Fenius again. In today's video lecture, we'll discuss what is accounting and what are the three key responsibilities of an accountant. But before we move forward, kindly subscribe to my channel and press the bell icon for future videos notifications. So let's start our discussion. What is accounting? Accounting is language of business. What do we mean by language of business? This word language of business means with the help of accounting, we can understand the business, especially the financial position of the company. But if we'll try to understand the detailed definition of accounting, accounting involves three main activities or three keywords: recording, summarizing, and presentation. So these three words are the three main responsibilities of an accountant. The first word is recording. As an accountant, it's our responsibility to record each and every transaction of the organization. All financial transactions of the business should be recorded by the accountant. For example, your organization is selling hundreds of goods during the day on cash basis and on credit basis. So as an accountant, will record the cash transactions and the credit transactions both. For recording purpose, accountant will use dual accounting method in which they'll record the both sides of the transaction. At the end of the day, what we'll have a bulk of information or bulk of data. So we'll not be able to extract any useful information from that bulk of data. So what we need to do, we need to use the second step, or the accountant needs to move to the second step, which is the summarizing of financial information or financial data. So what accountant will do, now they need to summarize the data. For summarization of the data, what they will do, as an accountant, they will prepare different kinds of accounts, and based on different kinds of accounts, they will try to extract the information or the relevant information. For example, accountant will prepare a sales account and a cash account, and in cash account will record all the transactions related to cash, and in sales account will record all the transactions of sales. And then at the end of the day, we'll try to identify how much we have sold on cash and what is our total sales. Once we'll complete this, or once an accountant will summarize the information, the next thing is we need to prepare specific books of accounts or key documents for our owners, for the stakeholders of the organization. And that third step is called the presentation of accounting information. So as an accountant, the third step is preparation of financial statements. What are financial statements? Financial statements are the key documents of an organization, or the books of accounts which are used to take decision making. And why we prepare these financial statements? For decision making. And for whom we prepare these financial statements? For our stakeholders or for the users of the financial statements. So who are the users of the financial statements? There are two main users of the financial statement or financial information. The first one is called the internal user, and the second one is called the external user. Internal users are those individuals who make decisions for the organization, whereas the external users take decisions about the organization. For example, in internal users, we have the owners. Owners will take decisions for the organization, means how much sales we need to increase, how much revenue we need to increase in the upcoming period. Whereas external stakeholders or external users will take decisions about the organization. For example, government agencies, they will try to identify how much tax we need to impose on the business. So we'll try to classify these two types of users of the financial statements. So internal users includes the owners, managers of board of directors, and the employees. In other words, internal users are those users that are within the premises of the organization. So any individual or any person who is within the premises of the organization is considered as an internal user. But external users are those users that are outside the organization or that deals from the outside of the organization. And those external users are the investors, creditors, regulatory bodies or the government agencies, customers, competitors, suppliers. These are your external users. So we prepare financial statements as an accountant for our internal users and external users. Internal users take decisions for the organization based on these financial information or financial accounts, and external users use these financial information to take decisions about the organization. So if I'll try to summarize this accounting definition, so accounting is what? Accounting is the recording, summarizing and presentation of what? Of financial transaction or financial information of an organization. But do remember, it should be recorded in a systematic manner. And in accounting, we have to follow specific standards or regulations. And those standards and regulations are called International Accounting Standards or International Financial Reporting Standards. So with the help of those financial reporting standards or accounting standards, we need to prepare the financial statements of the organization, or these are the guidelines based on which we need to prepare our accounts. Accounting is recording, summarizing and presentation of accounting or financial information of an organization by using a systematic methodology or systematic manner. I hope you have understood the definition of accounting now. That's it from my side. If you have any query, you can write below. Bye.